The U.S. comparison. Looking at Australia side by side with the United States highlights how two wealthy nations can produce very different outcomes for their citizens, even when headline statistics suggest otherwise. Australia's median wealth per adult stands at about $261,805, more than double the U.S. figure of $108,000, according to recent global wealth reports. On paper, this positions Australians as some of the wealthiest people in the world. Yet, when you dig into how that wealth is structured and how it translates into everyday life, the contrasts become much sharper. Disposable income is a key area where the U.S. pulls ahead. The average American has roughly $5,000 more per year in disposable income than the average Australian. This difference isn't just a function of income levels. It's closely tied to how each economy allocates resources and what portion of household budgets gets eaten up by essentials like housing. In the U.S., housing costs typically absorb a smaller share of income, freeing up more money for discretionary spending. Australian households, by contrast, devote a larger portion of their pay to mortgage repayments or rent, tightening budgets and limiting financial flexibility. The structure of each economy also explains much of this gap. The U.S. economy is markedly more diversified. Technology alone accounts for 12% of U.S. GDP, compared to just 4% in Australia. American firms lead in sectors like finance, manufacturing, healthcare, and entertainment, providing a broader set of opportunities for workers and investors. Australia's economic base is much narrower, with real estate and mining dominating both national output and household wealth. This concentration leaves Australians more exposed to swings in commodity prices and property cycles, while Americans benefit from a system that can better absorb shocks in any single sector. Access to credit and investment opportunities further distinguishes the two countries. While American households carry substantial debt, they also have more avenues to borrow and invest beyond real estate. U.S. credit markets support easier borrowing for education, business startups, and a wider range of investments. Australians, on the other hand, face a lending system that channels most household borrowing into mortgages. This focus on property limits economic mobility and concentrates risk, especially as housing affordability deteriorates. Labor market dynamics reinforce these differences. U.S. workers tend to change jobs more frequently, which drives wage competition and creates pathways for advancement. In Australia, job mobility is lower and wage growth has lagged behind, especially in fields outside mining or property. Professional salaries in the U.S., particularly in high-demand sectors like technology, often outpace those in Australia even after adjusting for cost of living. This contributes to the higher disposable income figures seen in the U.S. Retirement savings systems also reveal contrasting philosophies. Australia's compulsory superannuation system builds up significant balances over time but restricts access until retirement. In the U.S., individual retirement accounts like 401k, and IRAs offer more flexibility, including early withdrawals for specific needs, albeit with penalties. Both systems aim to encourage long-term saving, but the American approach gives households more control over when and how they use their funds. The investment culture in each country shapes broader economic outcomes. About 58% of Americans participate in the stock market, compared to 36% of Australians. This higher participation rate channels more capital into businesses and innovation, supporting a more vibrant entrepreneurial ecosystem. Australians, by contrast, tend to favor property as their primary investment, reinforcing the dominance of real estate in the national economy. Economic complexity is perhaps the most telling difference. The U.S. ranks among the top 10 globally on the Economic Complexity Index, reflecting its ability to produce and export a wide range of sophisticated goods and services. Australia, by contrast, ranks 102nd, lower than many developing economies. This lack of complexity limits resilience and future growth potential, as the country relies heavily on a handful of sectors. These structural contrasts shape not only economic outcomes, but also the lived experience of ordinary households. While Australians may report higher median net worth, much of that wealth is locked up in assets that are hard to access or vulnerable to downturns. Americans, with more disposable income and broader opportunities, often experience greater day-to-day financial flexibility. This comparison underlines the importance of looking beyond headline wealth figures to understand real economic security. It also raises questions about how nations with similar levels of prosperity can face such different challenges when it comes to affordability, opportunity, and resilience. As Australia grapples with these issues, it's not alone. Other countries with similar profiles are facing their own versions of these pressures.